The S&P 500 rally to a new high. It just got a failed breakout, but we're back at levels of greed. We are forming a multiple point divergence between the S&P 500 and the fear greed index. The S&P is in red up here, the fear greed index in below over here. We had this divergence that gave us the sell-off on July 31st down to the August 1st low. It was a pretty sharp decline very quickly here with the S&P here, and that gave us this downturn on the fear greed index. But the S&P has just been going sideways, slightly grinding higher little by little. It's ended up forming this multiple point divergence here with the fear greed index, which is what I warned about. Get a divergence at the August 15th peak on the S&P. Now we have a triple divergence on the RSI with the multiple point divergence here on the fear greed index. Again, I believe the S&P is going to go higher towards 6,700, maybe even as high as 6,800, depending on how long it takes to reach the trend lines, which I showed you in my last update, and I show you those channels in the weekly time frame. But likely going to be pulling back to the 20-week moving averages, towards the 200-day moving averages in the daily time frame. Bitcoin's already selling off sharply. The NASDAQ has already peaked on August 13th and is dropping. Had a counter trend and got rejection at the 78.6 Fibonacci, which I showed in my last update. And you've got this divergence as the S&P gets a failed breakout. I talked about my last update. We had a reversal, a confirmed reversal with our long-legged doji on NVIDIA, and it got confirmed, and we saw signals turn back to bearish, forming a double top pattern on NVIDIA, and we got NASDAQ getting rejection at the 78.6 Fibonacci as NVIDIA gets a confirmed reversal from our long-legged doji surrounding earnings. I told you about a post earnings sell-off for NVIDIA, and I think that is now happening with that confirmation. I told you it'd likely get rejection at resistance, which I covered in my last update. I told you even if I was wrong and it overthrew that level, it would likely be a Microsoft reversal bar. We did get a reversal bar at key resistance. A long-legged doji is now confirmed, and that gave us rejection here at our 78.6 Fibonacci from this entire decline, 4.28% on the NASDAQ, rebounding back up and getting a lower high. S&P diverged with the S&P diverged with NASDAQ, I should say, so often do at tops and bottoms. Meanwhile, the S&P got a failed breakout. We got above on Thursday. We got above the August 15th high, tried to get above it there on an intraday basis, but we closed just slightly under it. But we got above it on a closing basis on Thursday, but we failed to get confirmation and a follow through. I told you to be watching this trend line and the trend line from the 2023 low. We didn't make it. We didn't make it to those trend lines, and we turned down. Now we're at the 10 period. In order to get a bigger sell-off, you got to take out the 10-20 and the momentum cloud. NASDAQ had peaked on August 15th. It dropped 2.20%. It rallied back up, and so far we have a failed breakout on the S&P 500. Tried to get above that level, and it failed. Told you if we did get above it, you still get a head fake above that level when you break out above a level, and then it ends up failing immediately. That fake could have ended up here or at the trend line from the 2023 low. So far, it has not. So far, we've come back down to test the 10-period moving average and drop back below the August 15th peak. So that's where we stand. Some warning signs, and again, NASDAQ and S&P are diverging from one another. Well, we also have the divergence here with the put to call ratio, 5-day moving average, and the S&P 500. The raw data is behind it. The divergence formed over here in July. We went sideways, eventually went higher, and got another reference point of divergence there. And now yet another nice looking divergence back at the February top. Very similar divergence. This is a multiple point divergence. We could take it again here with the July and August peak and build upon that here. And again, looking very similar to what we had back over here, just a larger divergence. We still have these multiple divergences developing here on stocks above their 50-day moving average. Remember when we were down at single digits, everybody was telling us we were going to crash. I told you we were bottoming. We were hitting major trend lines of support, horizontal support, rising support, and we had market breadth indicators at single digits. We had the fear greed index at readings of 3, 4, and 5 at the April bottom. And right after it, the same people that were telling us we're going to crash the herd. When, well, the perma bears are telling us we're going to crash at key support, you got to be right. And they're going, yeah. And now, resistance with these diversions is developing. Trend lines of resistance in the weekly time frame, which I took the time to show you in the last video. And now the same people that are telling us we're going to crash over there are telling us there's no way we're going down. Yet you have all these divergences. Nasdaq's already peaked. Nvidia's already peaked. Bitcoin's already peaked. S&P just got a failed breakout, drifting slightly higher. August peaks just slightly above the July. The August peak slightly above the July peak. And all these divergences are forming. Same thing going on with stocks above their 20-day moving average. Divergences are developing. Multiple point divergences. I talked about the divergence at extremes here with the NAAIM exposure index. This is what money managers are doing, and you've got this divergence going on up at extremes. This is showing they're all in as we're slamming into the trend line here, trying to get above it for the week, and we couldn't close above it. We turned down. We got that doji on the weekly chart. Covered that in the last update in great length and detail. You could see those candlesticks up close. Hit this trend line, and again, we're likely seeing something like what we had over here where we straddle along this area for a little while. Over here, we straddle along these two highs over here for a little while. And you got your bigger sell-off in each of those cases, and you're likely seeing the same thing here. We'll get a sell-off, and then I think we'll go to one final high near 6,700, maybe a little bit higher. Maybe 6,800, depending on how long it takes to reach the trend lines that I've talked about in the weekly time frame. But this is suggesting that we're going to get a sell-off. I think we move back towards the 20-week moving averages. Here I have the 50-week on this chart. I think we pull back, get the final climax rally. I think we're in the final phase of the blow-off top, which started down here, and I believe that the final phase of the blow-off top finish with the final climax move, which I think we'll be getting with the next rally. The VIX was up nearly 7% on Friday. The VIX has got multiple point divergences. The MACD got a bullish cross on Friday. Again, if that bullish cross takes it into positive territory here, you're going to see this bullish divergence play out. And you're going to get above the 50, and you're going to come surging back up here. Look how tight the Bollinger Bands have become. We had the sell-off in July, and it didn't. It's a reversal, just a pullback. The sell-off with the August 15th peak, and again, didn't give us a sell-off. We went and we made a new high. We just had a failed breakout. But look at how tight the Bollinger Bands are here. Look at that. It's telling us something big is getting ready to happen. A bigger sell-off than what we've seen. Probably a move back towards the 200 period moving averages, or at least toward them, maybe to them, the daily time frame, or towards the 20-week moving averages. But this MACD got a bullish cross on Friday. The stochastic turning up. These divergences are likely now done. Great Scott, did you hear what I said? The divergences are likely now done. Multiple point diversions here on this MACD and the RSI. When it goes positive, you're going to see volatility return sharply, and that RSI moving back above 50. It's had a couple failed moves above 50, given us pullbacks, but you're likely going to get a much bigger pullback and likely get a big wide range bar on the VIX. It's going to give us a big wide range nasty looking bar on the Nasdaq and the S&P 500 once we get above the 50 right here. And again, this trend line, which slightly has moved on me here, right above this trend line right here, and the upper band, once you get above the 50 period, once you get above this trend line, the volatility will return on the S&P 500 if you could stay above that 50 period moving average. When you get above the 50 period moving average on the VIX, bad things start happening on the S&P 500. But these divergences eventually allow volatility to sharply increase. We're down here, at the mid-teens right here, and this is often where you see bottoms, but it creates complacency in that the S&P has drifted sideways. Nasdaq has already peaked, 2.5 weeks ago on August 13th, but the S&P, because it drifts slightly higher and the Dow hit that new high, is camouflaging the tech sell-off that we've already seen begin to happen from the August 13th high with NASDAQ. I bring up the MACD closely, you can see it got that bullish cross. The histogram turned positive. The MACD turned back up. Again, this bullish cross is probably the final bullish cross of this multiple point divergence that will eventually, once it goes into positive territory, will lead to an enormous amount of volatility. When the VIX gets above 50 and the MACD gets above 0, you get a lot of volatility on the S&P 500 from the VIX exploding higher. Now, the MACD tried to turn up with the July 31st peak, but it ended up rolling back over. We sold off to August 1st, and then we attempted that rebound, and it prevented it from going into the positive region. It's not going to be so lucky the next time. We're likely going to go in there. These divergences are going to play out. And again, because they don't play out immediately, then the herd gets lulled into the false sense of security. They buy this false narrative. Well, it hasn't played out yet, so it's not going to play out. I would be ignoring these divergences on the stochastic, on the MACD, and on the RSI, all diverging with the volatility index. Momentum flipped back to bullish on NASDAQ. It might get a bearish reversal of conditions since NVIDIA got one on Friday, but because of that, some signals have turned back to bullish for NASDAQ. Others have not. NASDAQ's getting rejection at the 78.6 Fibonacci, at least so far. I'll be watching to see if it joins NVIDIA and getting a bearish reversal of conditions next week. So do we see the signals that did turn back to bullish revert back to bearish? And the ones here that remain bearish, do we now get a lower high and a lower low? NASDAQ daily chart, where again, signals have remained bullish for the S&P 500 consistently through the advance, flipped to bearish after the July 31st peak. Most of them turned back to bullish and remained that way. That's where we stand, and we're forming a 3 drives to a high. Now, if signals don't turn bearish, if momentum can't turn bearish for the S&P, it could still try to hit that trend line. But if we do see a failed breakout here and drop below the 10 period and start getting a reversal of conditions, start losing the trend line, our recent lows, start losing the momentum cloud, start losing the 20 period moving average, then it could be done with a failed breakout right here and now. Continuing to monitor this trend line up here from these previous highs and pretty much the same trend line going back to the 2023 low. We keep turning off of it here in July and in August. Right now, we have a possible failed breakout if we can see a reversal of conditions and take out the 10 and 20 period moving average. 3 drives to a high is you get one push high into resistance, you do it again, and you go and do it a third time. Is it done here? Maybe. Watching these trend lines directly overhead very carefully, and the rising trend line from our previous lows here. Be watching that trend line. Do we reach the blue trend line and then turn down and break the red one? Or do we not reach the blue one and move to break the red trend line? It's likely that this resistance is going to hold. If we do end up hitting it, again, it's currently in the low 6,500 area, but it's rising each day that we don't reach it. It rises just a little bit higher. It was around the 6,530 area. Now it's around the 6,540 area. But if we don't reach it and we get a reversal of conditions, we got to see this trend line break right here, which has acted as support at all of the recent lows. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. I thank you for your consideration for that. Now, next, bullish reversal of conditions to hit the 78.6 Fibonacci, and it's turning down off of that now, but it's getting a lower high here. I still have red bars after turning down on August 1st, the rally back up here to a new high on August 13th, and now the lower high, the bars still remain red. This could be warning that we're going to continue the downward movement off of key resistance. Change of trend, the signals turned bullish here, but that changed back to bearish here, and with the new high here and now lower high, the bars are still red. NASDAQ 100 daily chart here. And NVIDIA behaving the same way. NVIDIA, again, through the trend, the bars were bullish. We went sideways. Again, with that sell-off, we had turned bearish in August. After peaking on August 12th, we turned bearish shortly thereafter, going sideways, rally back up to test the high, but the bars are still red. Again, could be a warning sign of a bigger sell-off. We've had rallies back up to give us lower highs on NVIDIA and NASDAQ, but yet the bars are still red. Now, again, with S&P's recent sell-offs, I had some signals turn bearish with the July sell-off and the August 15th sell-off. Others did not. I'll be watching, do we join NASDAQ and start getting red bars if we break the trend line from these recent lows as I've talked about? Then you will see a bigger sell-off with the S&P, a larger correction than some of these smaller ones that we have seen. But red going down, blue going back up, and here still blue. I have other indicators that had turned briefly bearish and have turned back to bullish, but my signals have been mostly bullish through the entire advance here. We've been bullish through the entire advance without any kind of bearish. Most of them bullish up until the July 31st peak. Pointed out, a lot of signals turned bearish with the July sell-off, but then turned right back to bullish. But again, the signals were bullish. Most signals were bullish except for the shift in momentum. We saw a few shifts in momentum of bearish as we went sideways on some signals, but again, the trending signals remained bullish up until the July peak and then reverted right back to bullish. I talked about that at the time. The signals remain bullish. Again, we'll have to see the trend line I showed you earlier break in order to start seeing a sell-off. We've seen NASDAQ signals go bearish. Momentum tried to shift back to bullish. Thursday, it's still bullish, but a lot of the signals are still bearish. Some have turned back to bullish, suggesting NASDAQ's likely going sideways. But here again, do we see the red continue? Now, if NVIDIA creates a bigger sell-off for the NASDAQ, we'll be watching to see if we get a bigger sell-off for or if we get a reversal for the S&P 500 that gives us a bigger sell-off, a bigger pullback than what we've seen so far. Signals bullish on S&P, but getting a false breakout. Signals bearish on the way down, turned bullish, bottomed out, reversed. Signals remain consistently bullish all the way up on most of my signals except for momentum. Turned bearish here, turned right back to bullish. So again, we've got to break down below this previous low right here in order to see a sell-off and break the trend line from the previous lows, But some signals turning back to bullish for NASDAQ, others remaining bearish, and again, really telling us we're either going sideways or up. Guesses we've gotten a lower high and we're going sideways and likely to resume the decline with the NVIDIA reversal bar being confirmed and a bearish reversal of conditions on NVIDIA. But here's NASDAQ daily chart. Again, bearish, bullish, bearish, now back to bullish. But we're selling off. If we start coming down, taking out this low, you'll have a lower high and a lower low. You're seeing something like what we had over here, where we briefly turned back to bullish, and in this case went slightly higher, here slightly lower, but then it was followed by a reversal. Again, signals went back and forth, bearish, bullish, back to bearish, the pink background here, back to green, bars back to, going from red to blue, back and forth, just going sideways, but slightly drifting higher in what is likely a 3 drives to a high pattern forming triple negative divergence on the RSI. And again, we've had a couple false signals here with these smaller pullbacks. The July 31st peak, the August 15th peak. Again, the next one will likely give us a much bigger pullback. We saw the momentum line turn back to bearish with the sell-off from the August 15th high, turned right back to bullish here. But now we're getting this sell signal on Thursday being followed by a sell. We still have green bars, momentum still bullish, but we've gotten the divergence. And now we need to get another reference point of a divergence. Now we get another reference point right here at the center line as we really diverge with RSI and other indicators. And we've got a 3 drives to a high. Well, the S&P has drifted higher, going sideways, slightly drifting higher. The trend is flat right here, flatlined. We turned off that upper Bollinger Band and moved slightly higher, but didn't back above the band again. If we're going to turn down with the sell-off on Friday, we got to see a bearish reversal of conditions on the NASDAQ and S&P like what we did get with NVIDIA on Friday. And getting another sell signal here with Friday's reversal. We got one back over here at the August 15th peak. Again, downtrend, uptrend. Seeing the sell-off right here. Red is telling us that this rally is likely going to fail. Now we're getting another sell signal. The S&P risk model, the S&P trend is still bullish. We have divergences developing. We're still in a risk-on environment, but we have divergences developing. We've moved higher, but risk-on has not moved lower, and it's diverging as other indicators are. So if we see a spike in volatility and we start seeing a reversal of conditions with the S&P 500 and NASDAQ joining NVIDIA, we could see these divergences begin to play out.